Let's move on to Netflix shares. They've fallen nearly 11% since reporting second quarter earnings, but SunTrust says now is the time to be a buyer of the stock. The analyst upgrading Netflix to a buy rating, but trimming the price target to $410 from $415. It is our call of the day. Weiss just bought Netflix earlier this week. What caught your fancy?
I was waiting for it to bottom, and I caught a falling knife a couple of times, and I went to get it. Took a small position. I'll make it a bigger position. Here's how I think about it. If you take a look at the cable companies and how they grew, they started with low pricing, and they brought everybody in. Everybody got dependent on them. Netflix raised prices once. Their lever for raising prices is still very much intact. If they went up another $1 or $2, that would be tremendous. That would be tremendous to the bottom line, and they're still the default online provider. So I think they're actually in the infancy of their growth, not in terms of subs, but in terms of pricing and financials. So that's what caught my fancy. I like the fact that it's no longer stage right. Everybody loves it. Now there's some obvious debate on it, and some that got off will be getting back on. And I said originally, before the company reported, if it's down 20%, I'll buy it. It wasn't down 20% on the announcement, but subsequently traded down, so I thought I had to step up.
Interesting in this note is specifically that they think subscriber growth when it comes to U.S. as well as international on track. Consensus is very manageable at this point. And also India, they're really gaining traction there with their original series in India. And that, to use another media analogy, is where a lot of the big media players are eyeing. I mean, the whole thing with Fox, the Fox assets was an entree into India, and here Netflix is making some progress. That's what the analysts at SunTrust like.
It's clear that India is a growth opportunity there. By the way, I commend you on this. I think this is more of a trade for you than a long-term investment.
No, I've been long-term before. I got out, unfortunately, after close to a triple, 175.
Here's the one thing I want to be careful about. I'm not saying you're doing this, but the analyst is. If we're going to say that this quarter that the subs are going to meet estimates or whatever we're saying, we're only halfway through this quarter. It's very difficult to make that call. So if you're going to make a decision to buy the stock based on that, you have to bear in mind it's going to be at least 2 months before you know. It's going to be at least 6 weeks before the quarter is over. I just don't think there's any way to make that prediction here. And saying things like, well, they haven't missed 2 quarters in a row sort of sets you up for them to miss 2 quarters in a row. It can happen. Don't think that just because it hasn't happened since 2012 that it can't happen.
When will they become free cash flow positive, though? That's the thing that
this
really
analyst thinks in 2020. I don't know,
and
by like $116,000 or something like that.
Well, you're bringing a discipline that you want to apply to Netflix that has not ever been applicable to Netflix as a winning investment.
It's not relevant.
Right?
I mean, I hate to say that.
Nobody would be in the stock ever if we apply that
As
discipline.
a cash flow investor, and that's my primary metric for investing, is cash flow. I don't really care about it in this company. I care that I've got the best management probably in the entertainment industry, one of the best managements in terms of technology and internet, and that's what I care about. And that I think about it, I use Amazon Prime, fortunate kind of Amazon Prime, I've got Hulu, but as I thought about it, if I only used one, it wouldn't even be a close call. It would be Netflix.
Right. The question is, when can they raise prices, as you mentioned earlier, by enough to begin to realize that monopoly power?
Anytime they want, and I commend them for being patient.